Good morning. Welcome to today's morning blast for myself and Mr. Michael Brown. It's Wednesday, the 26th of February. Oh, just realised I still got my Sonos on. Sorry about that. If you heard some Japanese jazz in the background. Before we get underway, let's get the legals out the way. What am I got to say? Nothing discussed in this space. This session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morrow, Mr. Michael Brown.
Very good morning, Ryan. Good morning, everyone.
You good?
I am very well, thank you, mate. How are you?
Oh, good. Bit of positivity for once. Love it.
Well, I'm treading on eggshells now after mocking Tom Talks Cars yesterday and then finding out he was actually ill. So,
Seriously ill. Yeah.
Unfortunately.
So it nearly delayed our big release, our big update, our big PIQ platform update this morning, but we pushed on. We managed to survive without him.
He is quite inconsiderate, isn't he, with his timing of getting ill?
Well, yeah, that
could have waited a day or so.
Yeah, well, obviously Zach being on holiday again. Cam, who's listening in, he's feigning an injury as well. He's not been well. So everyone's just dropping like flies, mate.
Well, you and I will soldier on, Ryan, won't we?
Exactly.
Duty calls, as they say. Right, in terms of markets yesterday, it was another pretty soft day in terms of risk appetite. The S&P 500 ending the day down by about 0.5%. The Nasdaq down by just over 1%, although we did pair intraday declines of about 1% and 1.5% respectively. Nevertheless, that did mark the fourth straight daily decline for the S&P 500. No turnaround Tuesday yesterday, and that is the worst run of the year for the benchmark US equity index. And for the Nasdaq 100, it is the first time that we've had 3 consecutive days of declines bigger than 1% since August of last year. So the market is still on very, very shaky ground indeed. Conviction to buy the dip lacking yesterday as jitters over the US economy persist, and also ahead of earnings from Nvidia after the closing bell tonight, which we'll get on to in a short while. In terms of those economic jitters in the United States, they certainly weren't helped by the latest consumer confidence figures that we had yesterday. The Conference Board's index, that fell to 98.3 in February, down from 104.1 in January. And in fact, that decline marks the biggest month-on-month fall since all the way back in August of 2021. Now, I think it's important to note here that it's unclear the degree to which consumer sentiment is softening due to actual economic conditions deteriorating, or whether consumer sentiment is softening due to the uncertainty that's coming from Trump's trade and tariff policies. But nevertheless, the market is growing increasingly concerned about the state of the US economy, and we have subsequently seen some significant gains across the Treasury curve, with 10-year yields falling by a whopping 10 basis points yesterday, briefly trading below 4.3%, their lowest level since mid-December. And we also see the USD OAS curve, that now discounts around 56 basis points of easing from the Fed between now and the end of the year, which is, of course, marginally more dovish than the 50 basis points that the Fed indicated in their December dot plot. It was also a bit of a kind of sell everything day yesterday, which made me wonder whether there was a bit of a momentum unwind going on. Obviously, crypto falling out of bed, as we discussed this time yesterday. Gold was down by about 2% on the day, which is a pretty chunky move lower in a haven asset given the souring in risk appetite. And we also saw WTI crude losing almost 3%, settling below $69 a barrel. Amid all of that, the foreign exchange market appears to have fallen asleep, to be completely honest with you. The dollar going absolutely nowhere yesterday, with the dollar index spending most of the day around 106.30, which is roughly where we wake up and open up this morning. Cable continuing to hold its ground above the 126 mark, and the euro continuing to chop around 105. The yen was pretty much the only notable mover on the day, trading dollar yen trading to 3-month lows with a 148 handle, although that move has paired overnight. In terms of other bits and bobs from yesterday, then, starting off here in the UK, we heard from the Prime Minister Keir Starmer yesterday, who I must admit, I think in, what is it now, 8 months, this is the first thing he's done that I actually agree with, which is that he is going to be boosting defence spending to 2.5% of GDP by 2027. The previous timeline for that was unknown, but there was an ambition to do it by 2030. There is now an ambition for spending to rise to 3% of GDP in the next Parliament. So that is 2.5% by the next fiscal year and 3% by 2034.
Bid up the defence.
Indeed. This uplift will be primarily funded by cutting the overseas aid budget. That currently is at 0.5% of gross national income. It's going to go down to 0.3%. Starmer also said in the Commons yesterday that they won't lift tax or borrowing in order to fund the defence budget, which is a comment that I can tell you now is going to age absolutely terribly. But nevertheless, of course, the context around this, it comes as European nations on the whole really up their spending on defence. Germany, of course, rumoured to be looking at 200 billion euros of additional emergency defence spending. And, of course, it comes ahead of Keir Starmer meeting Donald Trump in the Oval Office on Thursday. So I think Starmer wanting to get this announcement out before that meeting to hopefully pacify Trump and make things slightly less awkward when they do actually sit down for tea and biscuits or whatever it is they'll be having. Sticking with the UK, we heard from Ofgem yesterday, the energy regulator. They've announced that their price cap will be going up by 6% from the 1st of April. That is broadly in line with expectations, but it is nonetheless a pretty chunky rise. The typical dual power bill in the UK will be going up to £1,850 per year from the start of April. And of course, that feeds into the BOE's expectation that CPI is going to end up somewhere near 4% by the third quarter of this year. Speaking of monetary policy, we heard from a whole host of ECB policymakers yesterday, nothing like a bit of joined up thinking over in Frankfurt. Isabel Schnabel was saying that they cannot say with any confidence that policy remains restrictive. We then heard from Yanis Storneras, the Greek representative, about 2 hours later, saying that rates are definitely still restrictive and that we should keep cutting until we get down to 2%, which is where the terminal rate likely stands. And this is what happens when you have 27, 28 people trying to make monetary policy. It just becomes a shambles.
Yesterday, when these two headlines, these two stories came out kind of quite, as you say, quite close to each other, straight away I'm thinking we're definitely going to be getting some sources mid-interview or mid-presser next week.
Absolutely.
You know what I mean? I was a sign that there's some discontent within the group when the sources comments come out before Lagarde even starts speaking.
Yeah, most definitely. I think actually it's worth noting, and self-promotion, I did mention this in my ECB preview, as we get
and a very
closer,
good ECB preview it is.
Oh, thank you very much indeed. As we get closer to the neutral rate, which the ECB staff believe is between 1.75% and 2.25%, I think dissenting opinions on the governing council are going to increase quite considerably. When rates are at 4%, it's very easy to go, we need to cut them a bit. The question is now that kind of fine-tuning, that last mile of where does policy actually end up? And unsurprisingly, there are going to be diverging views on that. You see that across the board. So, this noise from the ECB is only likely to intensify.
Funny enough, a central banker, I can't for the life of me remember who it is. It might have been one of the FOMC members. I believe last week mentioned that, the closer you get to your target rate, the harder it is to work out if that really is the target rate. And it's a very valid point. Like we're saying here, when you're God knows how many 200 basis points away, it's obvious that you've got to cut. But when you get closer to it, it's as you said, that's when the discontent kind of comes in and the disharmony within the group.
Yeah, absolutely. And of course, the other thing is that no one actually knows where neutral is anyway. So it's all a bit of a sort of moot point discussing it in the first place. But, we are where we are. Anyway, other bits and bobs. We heard from the Fed's Barkin yesterday. He's a 2027 voter, so what he says matters about as much as what Ryan and I think. But nonetheless, he is waiting for more confidence in inflation getting back towards 2% before delivering any changes to monetary policy. Very much sticking to the Fed's script on that front. Elsewhere yesterday, Saudi Arabia, they are going to offer the first sovereign euro green bond that the Middle East has seen, which I'm sure will be a bit of an interesting one for the ESG folk. They'll be all over the green aspect. They probably won't be all over the Saudi aspect of that particular issuing. We also heard...
Look over here. Look over here. We're issuing a green bond. Don't look over there where we're beheading people.
Yeah, exactly. And don't bring your rainbow flags here. Oh, God.
Oh, God. It wasn't me. It wasn't me.
No, it wasn't. Moving on, we have from Reuters sources yesterday in the AI space, DeepSeek. They are apparently speeding up the launch of their R2 AI model. This was initially planned for May, but now they want to roll it out as soon as possible. So good for them, I guess. Overnight, just a couple of bits to mention from me. CPI in Australia came in at 2.5% on a year-on-year basis in January. That's unchanged from the level in December. It is worth noting, though, that the Aussie monthly CPI data is a bit weird, to be completely honest with you. The way that they compose their, rather than having the same basket of goods every month as pretty much everyone else does, the Aussie CPI basket actually changes as the quarter goes on. So at the start of the quarter, it's much more heavily tilted towards towards goods. And then as the quarter goes on, you get more and more services prices that feed into the metric. So you typically see this really choppy pattern where price pressures are more subdued at the start of the quarter, and then they tick higher as the quarter progresses, which to me is mental, but that's how they want to do it. So
yeah, just keep it simple.
Yeah,
please keep it simple.
It does feel like they're overcomplicating that one, but
yeah, massively.
They're Aussies, so they're a law unto themselves. And last but by no means least, Bloomberg reporting about an hour ago, China, they are going to start recapitalizing some of their banks with at least $55 billion worth of cash. Obviously, that's translated into CNY. This, though, is not new stimulus. This is just a confirmation of some of the measures that they announced, I believe, in September of last year. So although Bloomberg are running it as a red headline and shouting it from the rooftops, it's not fresh cash in China. Right. It's more just them saying, we're doing what we told you we were going to do anyway.
Got you. Perfect. Thank you very much, Mr. Michael Brown. Before I crack on, quick shout out, as I said, to Cam, who's not doing very well, so no crypto blasts at the moment. Also, if Tom does play this back, get well soon. We need you to help us with our update, so please get back to work. Also, shout out to Alpha Pix who are listening in. I'm actually going to see them. Oh, I think, Michael, you're going to see them tomorrow potentially as well, aren't you?
I'm meant to be, although I still haven't been sent a calendar invite for that. So if you're listening,
you got to do everything the right way, right? Anyway, cracking on. So some overnight headlines and whatnot. Tell you what, start off this. Give a quick look at commodity space at the moment. So we're currently oil steady after yesterday's tumble and demand worries from weak US data. There was mixed private inventory data, surprise crude draw, but unexpected gasoline build. In gold, gradually recovering after the pullback. Back above at time of me writing this up, back above $2,900 per ounce. In copper, for those of you who aren't aware, copper prices supported yesterday by a large power outage in Chile, pretty much seemed to affect the whole of the country, obviously impacting the Codelco's mines. That includes some of the biggest copper mines in the world. And also Trump investigating tariffs to rebuild the domestic copper industry. And on that, pardon me, Commerce Secretary Lutnick said he's launching an investigation under Section 232 into imposing tariffs on copper, both raw and refined, in order to revive the domestic industry. The Trump administration views copper as a national security issue, similar to past actions on steel and aluminium. Other trade news in the US, the USTR are proposing new port fees targeting Chinese shipping companies and vessels. What else we got? You've done central banks. You've done that. Geopolitics. Russia-Ukraine reports that Ukraine and the US have reached terms on the minerals deal, possibly smoothing relations. There's been a lot of talk about security guarantees and who's going to be stepping in as peacekeepers. France and UK are apparently being put forward for that. Speculation about President Zelensky's upcoming US visit to finalize critical minerals pact apparently might be coming as early as Friday, but again, keep an eye on your headlines. Use PIQ Suite for that. Hint, hint, nudge, nudge. Middle East, ongoing tensions involving Israel and Syria, plus negotiations around hostages involving Hamas. There was an airstrike last night, I believe, in Syria by the Israelis. The US Secretary of State in discussions with Saudi Arabia regarding stability in Syria, Lebanon, and Gaza as we speak. Chinese President Xi has urged maintaining domestic stability amid global challenges. A quick one on the Hong Kong budget, obviously kind of related to China. They've increased bond issuance and slight tax cuts and liquidity support for banks. That's when they released their budget yesterday or early hours this morning. Other noteworthy headlines, we've got US gold visa program. So if you happen to be in the possession of $5 million, you can buy a US gold card to foreign investors to create jobs in the US, offering a path to citizenships. Bizarrely, Trump even said that Russian oligarchs might even be entitled under this program. So that'd be an interesting one to follow up on.
Do you know what I was thinking when I heard, if anyone
I'm not an oligarch.
No, not yet. If anyone's been to like Mayfair, St James's, Kensington in July or August, they will just know that
on a Friday you might see me.
Well, they might see you, but if they don't see you, it's basically like sitting in the Middle East. That's what America will end up becoming if that goes on.
Yeah, no, exactly that. What else we got? Obviously, we got the Nvidia earnings, which I'm sure Michael's going to brush upon in a minute. US House budget. Republicans pass a blueprint with deep safety net cuts, enabling 4.5 trillion in tax cuts. Apparently, that's not nice little bit of savings there. But yeah, that's it from me. Back to you in the studio.
Good stuff. Thank you, Ryan. Well, in terms of today, then, it is an incredibly light data docket. Of course, NVIDIA is the main event, which we'll get onto momentarily. In terms of the data, though, excuse me, just to mention it in terms of good order. At 3 o'clock this afternoon, we have the January new home sales figure out of the States. That's expected at 680,000 from a prior 698. In terms of other scheduled bits and bobs, we have a 7-year auction out of the States at 6 o'clock. That's $44 billion worth being sold off. The 5-year auction yesterday actually stopped through the when issued by 1 basis point. So we've had decent 2- and 5-year supply this week, obviously looking for 7s to follow that. And then in terms of speakers, we hear from the Fed's Bostic and Barkin, although Barkin will, for whatever reason, be repeating the speech that he made yesterday. So I think we can safely ignore that one. We're also due to hear from the BOE's Dingra, who is obviously way out of consensus, and her remarks will probably be ignored. The main event, though, is, of course, earnings from NVIDIA, which come after the market close this evening. Typically, NVIDIA report at 9:20 in the evening UK time, or 4:20 in the evening on the east coast of the United States. Although, as always, that is TBC. We have seen a few late releases of late, particularly Meta. They were delayed horrifically, so do just bear that in mind. In terms of number...
Go on. Before we go, but I would shit myself laughing if someone accidentally pushes the button and they come out an hour before the close.
Oh, that would be hilarious.
That's happened a couple of times in the recent quarters.
That would actually be hilarious.
Thankfully. I would shit myself laughing.
I think the market would probably shit itself as well.
Yeah.
In terms of numbers from NVIDIA, the street expects adjusted EPS at 84¢. That will be up from 81¢ in the prior quarter, and that will be on revenues of 38.2 billion from a prior 35.1 billion. NVIDIA have actually guided Q4, their fiscal Q4 revenue at 37.5 billion. In terms of the other two key metrics to watch, obviously data center revenues is the big one. That's basically a proxy for AI usage. Revenue there expected at 34 billion, up from 30.8 billion in the prior quarter. And then margins are the other thing to focus on, given how gargantuan they are in terms of NVIDIA. Margin expected to fall, according to NVIDIA's guidance, to 73.5% from a prior 75%. In terms of a bit more color around the earnings, of course, NVIDIA is not only an index heavyweight, being the second largest stock in both the S&P 500 and the NASDAQ 100. It's also a bellwether for the whole AI tech chip thing more broadly. So I think it goes without saying that any moves in Nvidia stock in after hours trade are going to have a significant impact on sentiment and on markets at a much broader level. In terms of Nvidia stock, options tied to the stock price, an implied move of 8.5% to either the up or the downside in the 24 hours following the earnings release. And we have seen, following the last 8 earnings reports, 6 advances and 2 declines in the stock. Personally, I think focus around the earnings later on will be much more on the guidance than it will be on the figures themselves. Of course, assuming that the figures are in line with or better than expectations. The market's focus will be really on 2 questions, I think. Firstly, can Nvidia maintain this, quite frankly, ridiculous pace of revenue growth that we were just touching on? And secondly, can they maintain these huge margins on which the business is operating as competition within the sector appears to increase? In terms of context around the earnings, the big thing to bear in mind is, of course, in the last 4 or 5 weeks, we've had the emergence of DeepSeek, which, if you believe what they say, they can make AI models which are just as good for using a lot less chips, older versions of chips, and for a lot less capital expenditure. As a result of that, risks around the AI theme on the whole have become quite considerably more two-sided in recent weeks. And I think the market is going to be in absolutely no mood to forgive Nvidia if they offer up poor figures or soft guidance. And we are likely to see any misses be quite severely punished in after-hours trade once those earnings drop. Of course, aside from Nvidia, the usual round of headline watching, particularly in terms of geopolitics, as Zelensky is rumored to be going to DC on Friday. But more broadly, I think, given how huge of an event risk, not just for markets, but even from a macro perspective, these Nvidia earnings are later on, I think that's going to keep a bit of a lid on conviction and trading as we move through the session, and twiddle our thumbs waiting for that report to drop in about 12.5 hours' time.
Absolutely. Thank you very much, Mr. Michael Brown. A quick bit of self-promotion for PIQ. We've done a quite a significant upgrade overnight this morning, so shout out to the dev team for that. One of the benefits of this, it means that we're now in a position to really seamlessly onboard trading groups and enterprise licenses and stuff. So if you're somewhere that wants a very cheap or very, very cost-effective way of gathering news sources in multiple, from like defragmenting the news sources that are out there and putting them all onto one platform, including like Bloomberg TV and all that stuff, get in contact. And same if you're in a Discord group or anything like that and you think that your members would benefit, if you ask me politely, there's every chance I'll give you quite a decent free trial for the whole group, and we can just roll it out to everyone. So come and say hello. And also, don't forget, next Friday, beers with me and Michael. Well, not on me and Michael. You're buying your own.
I was going to say this.
I've got to stress that. If you turn up, bring your wallet, because you'll be buying me a beer and you'll be buying Michael Brown a martini. Or an appletini, maybe. But anyway, we digress. We can talk about this next week. Michael, thank you as always. Listeners, thank you as always. If you are trading today, keep it tight. And as Michael said, beware the Nvidia earnings. Although on that, you can hedge overnight in Nvidia if you do want to see an opportunity on Pepperstone. The better way to trade.
Oh, God.
Right. See you later.
Bye-bye.
Bye.